how to choose a good mortgage lender or a bad one. All right, we're going to dive into this. And as a mortgage lender, I've seen both sides of the equation. And from my seat, here's what I know based on thousands of conversations with clients that have worked with us, clients that have started with another lender that got to us, and clients that ended up not working with us and worked with other lenders. There's so many differences, but when we think about if you're in the market to purchase a home and you're looking for a home lender, here are a few things that I would be looking at if I were a consumer and did not understand anything about mortgage lending or lenders. The first thing is go out and social proof the lender. And I don't mean the lender like company, I mean the actual loan officer. Because as we know, with some of these big online tech platforms, they could have a lot of different reviews. But tell me about the review of the person, the loan officer that you are working with, that loan officer team that you're working with. What are their reviews? Do they have reviews? Because that's the person that's going to be responsible for getting you to the finish line. It's not the big parent company. So I think when we talk about reviews, I've got so many reviews. I see these companies really pitch the reviews. Heck, our company pitches reviews. I get it. But at the end of the day, who is the person that you are going to work with day in and day out to get your keys on that closing date? And that person, that team, that is what you want to better understand. That's where you want to see the testimonials. Secondly, experience and knowledge. Now, hey, I have sons in their 20s, and they are starting out in their careers, and everybody's got to start somewhere. But if you're going through the process and you maybe are talking to a brand new loan officer, that you're questioning just the skill level or the experience of knowing your particular scenario, then ask if they have a mentor. Ask if they're working underneath somebody that can help them get you to that finish line. Experience matters, and it matters in home lending because there are so many things that can go wrong. There are so many things that drive loan approval. The more experienced the lender, the more insight they're going to have, and the thought of, oh, what about this? Oh, hey, this happened before. Oh, hey, there's this over here that I got to keep my eyes on or be considering as we work through this particular client scenario. So experience really does matter. Again, I love young people. We need young people in our industry, and I support them and I mentor them. And again, I think it's just important. If you're young and you're new and you want to get into mortgage lending, find a great mentor because they have that experience that will help you best serve your clients that are coming to you. All right, number 3, clear communication and transparency. I would ask, tell me about your process. If a loan officer doesn't have an answer for you and they can't define their process, red flag. Because home lending, in as much as there's a lot of variables that take place, it's also very systematic. There's a set process that we all go through to get keys in hand on that closing day. So ask about the process. Do they have a team? How does that team work? Who's your point of contact? At what point does a file go into underwriting? What is the process? And you'll be surprised, it's not always the same answer. All right, competitive rates and fees. Do not be fooled because there are a lot of different games that happen out there. So look for a lender that has a competitive rate and fee structure, but that doesn't always mean it's going to be the lowest interest rate. And this is what I'm talking about. I have seen it time and time again. Maybe we end up not winning that scenario because maybe that borrower has found a lower rate. But by the time that from that rate quote to the time they go under contract to the time that loan gets locked in, and then the final closing numbers many times will change. Now for us, that's just not the way we roll. We are very clear based on what we know at that point in time and based just on experience on that particular market that you're purchasing a house. We understand escrow impounds, average homeowner's insurance costs, transfer fees. We understand all those things. So we're not going to lowball you. We're not going to remove those things from the cost estimate just to win or look like we're less expensive. It's very important to know that there are certain things that go into purchasing a home and certain closing costs. And if you're not getting that full picture, then you're not in a position to really make an educated decision on who to choose to work with. All right. And then track record of closing on time. I mean, you can ask anybody at our company, but certainly on my team, it is just a non-negotiable. We are going to close on time. And if something happens, because things happen, maybe the appraisal came back and it's subject to some type of repair. Maybe, somebody gets hurt or sick. There's all kinds of life events that happen that could impact that closing time frame, but it's not going to be because of us. And if for whatever reason something does come up, the important thing is that you're communicated with. And I'm going to lead into that because these things really make a good lender. The thought process, the experience, the education, the knowledge, the clear communication, all of that is just important to choosing a lender. But when you're talking to lenders and you're remembering this video, here are a few red flags just to kind of pay attention to. And that is, I have seen a trend, and I still don't understand why, but I have seen a trend of some of these big platforms, these big mortgage lending platforms, and even some of the smaller ones, where they ask you, the client, not to submit your documentation until you find a house. And that's just like crazy talk to me. Crazy talk. Because the lender is going to give you, once you complete the application, once they pull your credit, and in our case, once we get the documentation, but when lenders are issuing a pre-approval letter or a pre-qualification letter without having documentation, I mean, hey, that's just like, okay, it doesn't matter because the devil's in the details, which is in the documentation. So I don't know why this trend is happening. I'm assuming it's probably a cost savings approach by some of these lenders, or, the likelihood of somebody going under contract in today's market. I don't know, but that's not, in my opinion, what is going to best serve you as a buyer. You want to get your documentation to the lender. You want to give them ample time to review it. You want to make sure that they have a strong understanding and a strong pre-approval before you go out there, because the worst thing that can happen is you think you're qualified, you go out, you get all excited, you write the contract, your real estate agent's working hard for you, you negotiate a great deal, and then the lender goes, oh, send us your documentation. Oh my gosh, I had no idea you had a side business and it's running at a loss, and now that impacts your debt ratio. No, let's get all that stuff out of the way before you actually get out there and start shopping. So that's a real big one, as you could tell with me. Lack of communication. Communication. How do they communicate? Do they text with you? Do they email with you? Do they call you? Is it a combination? We like a combination because there are certain things that make sense to email, especially like long lists of documentation needed. But we find that many of our clients liked to text. And so we actually have a text line that goes back and forth, and it's me and my team. So if there's a question and one of us is out, the other person can jump in, and we keep that flow going. So text has been very popular with current buyer behavior and needs and wants. And so texting, making sure, does your lender communicate in the style and the fashion that you want to be communicated with? And then for a lot of the young people out there, I would just say this. I know that in some cases you would rather email and text, but get on the phone. Get on the phone at some point early on and have that conversation. And it may be uncomfortable, and I get it. This is uncomfortable because it's a big deal, and you're borrowing money, and you may not be comfortable with just the way that the whole process works. But this is why it's important to get on the phone and talk with lenders, because you're going to learn stuff first. And secondly, you're going to be able to determine, gosh, I really think this person is a person I can trust to get me to the finish line. Now I'm going to circle back on that trust in a few minutes. All right. Pushy sales tactics. Oh, this is another one I see. We actually had a client recently who started with another lender, went under contract. Something came up within the first week of them being under contract. Then the lender came back and changed the interest rate and terms that they were offering to that buyer. The buyer's very upset, gets to us. We go through the whole process, and we are very clear. Based on your scenario, here's the interest rate, here's the terms, here are next steps, and we move forward. But that kind of like not drilling down, not really knowing everything that's going on as the buyer is moving through that process, that's just, and then that lender, because now the lender found out that this buyer was looking at another lender, i.e. us, that lender said, well, you only have until 2:00 today to make a decision. That's not the lender's decision. I mean, so the buyer called us, am I going to be in trouble? And, this whole kind of thing. So again, just sometimes the sales tactics that are used are interesting. And if it doesn't feel right for you, then it doesn't feel right for you. Unclear hidden fees, as I mentioned, this is one that unfortunately we do see a lot. We will see initial cost estimates without the homeowner's insurance annual premium being included. We see cost estimates without homeowners and property tax escrow impounds being included. And the strategy there is that they want to show the lowest cash to close or funds to close estimate. And then that from a buyer standpoint might be oh my gosh, I want to go to this lender because it's $4,000 less. But again, once you get into your purchase contract and you're moving along, you're going to notice if you're doing less than 20% down on a conventional loan, you're going to have to escrow for property taxes and homeowners insurance. That's just standard mainstream lending rules. So you don't have the option. So I'm always perplexed when I see these loan estimates or these kind of cost estimates early on in the pre-qualification stage for maybe somebody that's doing 5% down, but there's no escrow impounds shown on the cost estimate. I know clearly that is not going to be what the bottom line number is going to be as they move through, that buyer moves through towards the closing table. So again, just, it's hard to know what you don't know, which is why I do these dang videos. I mean, I feel that I want people to know and be empowered and ask great questions. And these are some of the things that I would be focused on. Okay. Obviously, bait and switch tactics, which is unfortunately what happened to the buyer that we're now working with and closing here in 12 days, which is awesome. But it's just, I mean, from a mortgage lending standpoint, I would be looking for somebody that wants to empower you, that wants to educate you. I would be looking for a loan officer and team that has infrastructure and that process defined to best serve you. That's why we do this, to best serve you, the buyer. And then lastly, I would just say limited loan auctions. This is historically one of those things that we had a buyer a couple years ago who was working with a big bank, and that bank declined his home loan because they missed something, by the way, and he didn't think he could buy a house. So his real estate agent said, hey, just call Kelly and her team and let's just get a second opinion before you completely walk away from your dream home. They called us. We went through all of the documentation. Yes, we're going to ask for it. So if you don't want to provide your documentation up front, then, we're probably not a great fit because we are going to ask for it. If you want a pre-approval letter and you want to go out and you're serious about shopping, we're going to say, hey, get us the documentation so we can be sure all stones are turned over. And so in that case, he didn't know that he had other options and also realized that not every lending company offers all lending options. So it's important to work with lenders, especially if you have unique scenarios. For example, if you are self-employed and maybe your tax returns don't support your household income, very common for self-employed people. In that scenario, you want to be sure you're talking with a lender that offers alternative documentation home loan programs, and they exist. But if you're talking with a lender and say, oh no, we don't, those aren't offered, it just means that they're not offered at that particular lender or bank. So, and at the end of the day, the most important thing, and this is why I advocate having a conversation, the most important thing is trust your gut. If it doesn't feel right to you, then that's not the person you want to choose to put the likelihood of your ability to close on that home loan on time with clear communication, a correct estimate of your funds to close, and meet the closing date so you get your keys on that scheduled date. Trust your gut. If you have questions, you want to have an initial conversation, the Kelly Zitlow Group is here, 480-725-0150.